Good morning, everyone. This is Brad Matheny again. This ES setup just keeps getting more and more interesting. Okay, so we've gone through two videos already. The beginning, where we learned about the avoid loser range, which does not apply right now. We're in a trending mode. So once we're in a trending mode, we're not looking at loser ranges. We still have the which side confirms. This is the A versus B basis for all trading. We have a good solid breakdown in trend. We came down, perfectly hit my primary support level, which again, remember, was from a very long term rotation from a standout low down here. Where is it? It should be right here. Tiny little standout low on this 15-minute chart all the way up to this previous level here, gave me the 382 to 50 range. Remember, I used that 382 to 50 range persistently, and now we've hit that support level. So at this point, let's go back down to the 2-minute and come over here. And we are now going to pay attention to what's actually going on here. We have run into resistance. We've got an anchor bar here, which sets up a breakout range here, just above this anchor bar. And we have another range just below this anchor bar. This becomes our selling point for confirmation. This is the bounce we want. This is what we expect to see happen in a trend. It's going to, remember, price rallies to a new high, rally. Price extends to a new high or new low always. That is the rule of Fibonacci price theory. Price is always seeking new highs or new lows, no matter what. Okay, that means in consolidation, in rotation, in trending, it is always seeking new highs or new lows. Failure, like here, to get above this previous high is a warning that it can't sustain this upward momentum. Continued failure here is another warning. As we hit this low and then bounced up, we immediately moved into, and I'm sure many of you can see this, a flagging formation. Okay, very clean little flag, which eventually broke to the downside, giving us a very solid trend. But we had that immediate loser range here that we had to confirm. Yeah, this flag broke downward. Yeah, it gave us a very clear signal, maybe earlier than my Fibonacci price theory, but we didn't get really confirmation until we got down in this area. This is where I call the sweet spot. This is the sweet spot of trading, right in here. That's where you can make some real solid money. Real solid money. I make it dark blue. That's the sweet spot. That's where it's very easy for you to make 10, 12, well, whatever price will give you, but it's there for the taking. So now let's come back over here and let's take a look at where we're at with this. So I've drawn all kinds of stuff on here. We're now hitting the support level. We've drawn our Fibonacci price ultimate low down here at the bottom. We still have our ultimate high up over here. So now we're getting to see if we have confirmation above these anchor bars. Let me spread this out. I'm dragging these around because I may need them eventually. We'll spread this out. So now, what do you think, folks? Take a look at this. We've got a deep bottom. We've got support. Okay, we have this rotation here. We have an anchor bar here. We have no new anchor bars except one may form right here. We're getting above the previous anchor bars. Now remember, I told you we would want to be above the previous two anchor bars. Here's one here. Here's one here. So a move above this point here would be very solid. We get confirmation. Guess what? We are now short-term bullish. That's right, guys. We are short-term bullish based on confirmation of the data, meaning price broke above this level. We are now bullish. We would have a resistance area here, which again, this is going to be an area where we'd likely want to keep our stop. We have major support down here. We're looking for a pullback. We need price to get above these resistance areas. Now, price will, if we're correct on this breakout, will succeed by moving up to this area, and then maybe a bit higher, or it will fail and fall down, breaking below this lower level, and then continue to move downward. It's always trying to make a new high or a new low. Always. Okay. We have higher highs taking place in a potential trend. We have higher lows taking place in a potential trend. We need to now see where we're at. Where would I be trying to buy this? Because we're not clearly above these resistance channels. Now I will modify this to try to make it a little bit more visible on this multicolored chart. Make it blue. So because we're not above these resistance channels yet, if I were to initiate a position right here, it'd be very, very small, maybe one or two contracts, because I need to see that we're going to break above this resistance. This resistance is very, very important. If we do not get above this resistance, we are ultimately going to fail. And that means that if we do not get up in this area, we will roll down and continue to roll into a downward trending. Now, I would also be looking for, and I'll get rid of some of these now, leave them there, because we have our A and B direction. We're also looking for new anchor bars. Okay, we need to see some continuation of an upward trend. So we're going to sit here. We're going to watch this 2-minute chart. We're going to see what happens. We found the support. This is initial support. It was absolutely beautiful, right where I drew it, right in the middle of the range of the 382 to 50 level. So again, how can you predict where price is going to go? Well, you can't accurately do it with any degree of long-term success, but you can establish levels using Fibonacci, and I'm just teaching you how important the 382 to 50 level really is. So now we've gotten our breakaway. We're technically bullish. We have our avoid loser range, which means that we want to stay away from this area. This is potentially our avoid loser range. Anything in this channel, anything in this chop right now is no longer really a valid trading range. We've seen it pull back enough. We've gotten a very solid anchor bar here. We've gotten a secondary anchor bar here, which confirmed. Now we're looking for an uptrend. Now we're technically short-term bullish. We may have one or two contracts on. Where would we want to keep our support or stop level? Well, it's pretty simple. You can use a Fibonacci level from here to here. Come back in here, try to find that 382 to 50 level, which is right in this area. 382 to 50 looks like it would be roughly there if I'm correct. And that would be your support level. Notice, and I'll spread this out a little bit, notice that too far. 382 to 50. I moved it a little too far right here. Notice that that is, again, little bit below or above our zone of the avoid loser range. It's a little bit above our avoid loser range, and it is well within the support zone that we have here. This is really where our support should be. So this is approximately where we should have our stop. A little bit below, probably down in this area, a little closer to our avoid loser range. And I will set these up. The avoid loser range is a little different. So these are our avoid loser ranges. And now we'll wait and see what happens with price. So we should have our stop somewhere in this area. Stop should be somewhere probably down in this lower quadrant of the support channel. We're waiting to see what happens. We are now short-term bullish, intermediate term bearish, and still long-term bullish. We have not had a deep low correction. So we are now, we think of it as we're in an uptrend, potentially short-term. We're in an intermediate pullback to the downside, intermediate term, and we are long-term bullish. So ultimately, if you do a simple math and try to calculate this, you're basically looking for the markets to continue to rally over the next 2-3 weeks, unless the long-term daily change or daily triggering system changes. Okay, so now we have this bearish anchor bar. Okay, so that becomes very important again. So now our avoid loser range, I'm going to come in here and do this. Our avoid loser range has to go above this level, and where we're at back here off of this level, I would say that our avoid loser range must go just below this support level here. And now this is our avoid loser range. Okay, now we want to make sure that you understand that our support level is pretty much at the same level, our stop level. We've got the anchor bar, we've got the trigger right here. But now that we've got this downward anchor bar, this sets up a very key range between this yellow line and this blue line, which is our avoid loser range. We do not want to be taking any major decisions within this area. We may still have our long 1 or 2. We have our stop down here. We're looking for a breakaway. We'll see what happens. Got about 8 minutes left to go in this video. Hopefully the SPY or the ES cooperates. But can you now see how this works? Are you starting to get a picture of how we traded all the way down? We used our price confirmation system to get us into a beautiful short right back over here and here. I mean, it was a beautiful move, breaking down, setting up what was this total move to the low? An 18-point downside move. Absolutely beautiful. Could have easily grabbed 12, 13, 14 points out of that. I mean, that's pretty good, folks. That's a $700 move per contract. And you could have protected yourself at the end. And you now are knowing exactly what to do. We're in the avoid loser range area, and we're waiting for the markets to actually do anything to confirm. Now, remember, price always wants to make a new high or always wants to make a new low. So it's just a matter of being patient. And that's one of the hardest things to understand, is that patience, waiting for the market to actually give you the proper setup and confirm it, is something that most traders don't do. They actually look at a chart and they try to, I don't know how to say it, manifest a trade. They literally will look at something all the way down here. I mean, it's bottom, buy, it's bottom, buy, it's bottom, buy, it's bottom, buy. No, that's the wrong way to do it, guys. Remember, price is the ultimate indicator. Price teaches us that it always tries to make a new high or a new low. And in this case, where's our new high, guys? It's right here. That's our standout high right now, is right in this area from here across here. That is our standout high. It's not a unique high. It is a standout high which must be broken in order for price to move higher. The low level down here, the ultimate low, is our current ultimate low, and it must move below this low for price to move downward. Now, you could argue, but Brad, what about your avoid loser range? Look, the avoid loser range is very short term. It allows us to make decisions on the ultimate short term basis. But understand that price must clear above this high, which is our current standout high, in order for us to be able to move higher, or it must break below this level in order for us to move lower. That's the bottom line. If it can't do that, it's going to trade in a sideways channel, and then we're going to basically have to wait for it to break out. Now, you do have a standout high right up here. You do have another standout high right here, which becomes very important as well, because what this is telling us is if it gets above this level, then it's going to go through support or resistance in here and try to take out this level. That's the next level that price would be targeting if it moves higher. Okay, so we're trading sideways. We're waiting for the SPY to do something or the ES to do something. Let's just go ahead and wait. Looks like we might technically get stopped out on this. We'll see if we get down below this level. Remember, we are intermediate term downtrend, short term uptrend, long term, meaning daily, weekly uptrend. So at this point, we are trading a counter trend, bullish trend against the intermediate term downward trending mechanism. So we're kind of playing an early. This is an aggressive trade. This trading like this is aggressive. Technically, you wouldn't want to start looking for upward trending until it gets above these resistance areas here, these light blue areas, and takes out this ultimate high. But let's see what happens. Okay, let's just drag our stop level over so you can see if we get tagged. Okay, 16 minutes. I got about 4 minutes left to go. Let's see what happens. And again, great examples of how to trade. So you caught basically 16 points here. So plus 16.50 plus in that downtrend and per contract basically. And now we're looking at potentially getting stopped out right here. So this would be from a scenario of here to here. This would be a 4.5 point loss. So we'll see what happens here. Did we get stopped out? I don't know. Let's just see what happens because it came down and rejected off of that level. It's still inside of our avoid loser range level, but you would want your stop level somewhere down here near this avoid loser range level just to be safe. So let's come up, spread this out, and see what actually happens. Okay, so technically we are stopped out. We are setting up a new anchor bar to the downside. We are below the avoid loser range level. We are below the support level. We need to see if we get confirmation here. So we did take a 4.5 point loss, minus 4.5. And look at this rejection. Wow. Wow. Okay, we got stopped out, but massive rejection. Okay, so this means we take no more trading off of this rejection, off of this low. We do have a deeper low here, folks. So we have to be aware of the fact that prices has just established a new low. And that means the upward trend could be threatened. We have to reestablish the upward trend by dominance. We cannot take little aggressive trades right now. We have to wait for the dominant trend to become persistent. That would be, again, getting above the break, the upper avoid loser range area, and potentially getting into potentially breaking above these levels. So in reality, folks, we've got to see a very solid confirmation, probably somewhere above this level, which it looks like we might get. We've got to see a very solid confirmation above this level in order to confirm that we have this rejection. So look at how it's rolling around. And I only have a minute left to go. Boy, this could be great. So let me just tell you if I have a minute. So if we get up in this area and we establish a new high and come into this area here, markets don't always move in straight lines, folks. So you want to then try to look for buy opportunities in this area. And then you should see hopefully a move back up into this area where we have the previous standout high. So understand that we need to see this confirmation like this. Look for pullbacks. It's got to stay above this level. It could pop a low down here. That's fine because that would be a higher low overall. But eventually it's going to want to move up if we get a confirmation close up above this level. Beautiful rejection. This is again, and it's right over here. once I get to it, which side confirms? A or B? Which side confirmed? It blew down here, couldn't hold it, and rallied back up. Oh, it's going to let me go longer than 20 minutes. Okay, I'll go a little further. Let's see what happens here until it shuts me down. So we're going to just let it go, see what happens. We'll move this to the front, and we'll see what happens. Now we're getting a little rejection here, but we've got a higher high. Now let me get rid of these. Here, get rid of this, get rid of this, get rid of this. Okay, so we have a higher high, we have a lower low. What this does is this sets up a little bit broader price rotation. Higher high indicates that we are trying to move higher. Lower low means that we tried to move lower, but we failed. We failed here too. We're back in this middle range. But like I told you guys, we really have to be cautious. So what I'm going to do is I'm going to clone this, and I'm going to tell you that now I would be looking at a secondary avoid loser range in this area, because we have these deep lows and deep highs. Okay, we need to be very cautious of these deep lows and deep highs. We have our intermediate avoid loser range here between this dotted line and this dotted line. And now we have a secondary avoid loser range here between this and this. And again, this is my upside confirmation. This is where I want to see price go up above this level, because that's the only way that I'm going to confirm that price has enough momentum to potentially continuing higher. This rotation is a very clear indication that somebody tried to break the range and it failed. So here we are, we're back into our sideways mode. We got stopped out of our trade right here. I'll get rid of this little stop line. We are still waiting for confirmation. Remember, price must move to new highs or new lows. So let's see what happens here. We're coming back down into this loser range. We do not want to be overly aggressive in the loser range. We definitely want to set up and wait for confirmation. Remember that we have, I would say, air, as my friend would say, basically air in this area here. Air is untouched price range, and we have air in this area here. So we could easily move aggressively up into this area. And let me rechange this. We could easily move aggressively up into this area or this area very quickly. This is where we have air. Okay, so we will see how this plays out. And let's go back in here to the chart. Remember, this is a 2-minute chart, and we're going to try to get the price data on the front. Okay, looks like we've trying to close below both these avoid loser range areas. Could be a big breakdown here. Failure, we're down below this low. This is a new low setting up. So remember, this new low is very important. So we have a higher high here. We could be moving into an expanding wedge formation, kind of like this. So we have to be very cautious. Notice how it rejected again. Let's see what happens here as we move forward. This rejection again is very, very important. Although a double tap like this to the downside could and does provide some confirmation that price is generally weaker. So understand that this double tap to the downside is indicating that price is generally weaker right now. It's going to take much, much more to move up as far as momentum. And this is, again, something you need to be aware of. Okay, we're back inside the avoid loser range area. Boy, what a great example. So we don't do anything. We're not trading this. This is choppy. Can you pick a direction? I could, but it would be a guess. I need to see confirmation, and it may come in a very big bar. So I would suggest that breaking down below this level, the ultimate low level, would give us a very clear indication that price is essentially falling out of bed. And if it gets back above these avoid loser range levels, primarily above this level here, which is my ultimate trigger to the upside, I would say that we have a very good chance that we're going to continue to move higher. So 25 minutes in, let's see what happens. I don't know how long this will record. I thought it was 20 minutes, but maybe not. Okay, let's see if we get any confirmation here. Otherwise, like I said, you see how I'm doing this, right? You see how I'm following along. We've got the expanding highs right here, expanding lows right here. We're basically moving into an expanding volatile wedge. And here we go back to the upside. We keep getting rejected down here, meaning we come down, can't hold it, come down, can't hold it. We got rejected here, can't hold it above, can't hold it above, can't hold it above. Price is going to break one way or the other. And if I were to do a simple calculation here, A, B, C, D, E, yeah, I'd say that we're looking like this. We're looking like a very convoluted flagging formation to the upside. And the way I would try to draw that is coming from this area here, across these areas here, and then I would come across these areas here, which is A, and I would say there's our flag. A, B, C, D, E to the upside. Let's see if it holds up, because if I'm wrong, we're going to see pretty quickly. Maybe if the video allows me to keep going. So again, flags are very common. They happen all the time in price, and they generally happen right before trending. You will see some dramatic volatility near the apex of a flag. Flag patterns generally form in 5-wave structures: A, B, C, D, E, and I normally count the converse or the inverse trend as the primary direction of the flag. So bullish in this case, B to come here, C to come up here, D to come down here twice, and then E would be a rally up here to the upside. So let's see what happens. And sorry about this setting up so slowly. It's now 27 minutes into this video, but what can I do? So again, we've set up our loser, avoid loser ranges. We've set up our resistance. Everything is mapped by price. And because of this rotation right here, taking a loss, I am no longer actively engaged in trying to trade this until I get confirmation one way or the other. Okay, there's no reason for me to trade in this area. Just wait for price to tell us what it's going to do. Okay, I'm going to probably have to shut this down at 30 minutes. So we've got just under 2 minutes to go to see what happens. Okay, we're getting down into this loser range again. This is retesting these lows. We'll see what happens. Could be a breakaway pattern. Let's see. At the same point in time, could reverse immediately back to the upside. Let's see what happens. Ultimately, I'm prepared for either direction. So understand, it doesn't matter to me. Just make a move so I can decide what I'm going to do. Waiting, waiting, waiting. Still in our avoid loser range area. Maybe going to stay that way for another 20, 30 minutes. And remember, price can stay within a fairly tight range for an extended period of time. So you could be trapped in this mode for, a couple hours, just trading sideways. Okay, maybe a little breakout. Let's see. We're getting a little bit lower volume here. It wouldn't be too surprising to actually see the intermediate trend continue. Looks like we might be seeing a breakdown. Let's see. Only 30 seconds left to go. Rallying back up, getting rejected a bit, a lot of volume. Let's see if this gets rejected. Still not interested in trading it because I don't have any confirmation yet. We do have a double tap here on a low, very clean double bottom. We are getting, again, lower highs. You can see here. So this tends to predict that price is trying to push downward. We are building support in this area. So this has got to be watched. And a rejection back up in here by the end of, oh, it's letting me go past 30 minutes. Okay. A rejection. Let's see. There it goes. Rejecting again. Rejecting, rejecting, rejecting. Okay. New bar. Do we have confirmation? Nope. We have no confirmation, guys. This continues to get rejected. And now we're outside of the flag. So understand that flags can move into what's called a false breakout. So when you get into an end of a flag formation, A, B, C, D, and we think it's going to move higher, it's pretty common to see some sort of a false move, trapping the longs that were expecting this move higher into possibly getting out of their trade, maybe even a bit lower, before it actually rolls higher and tries to move into an uptrend. So it's not too uncommon to get this type of false rolling of the flag formation. I may let this go right now and we'll just see what happens. But hopefully, these videos can assist you and are assisting you. Remember, you have to be patient. Trading is a game of waiting for the market to give you the best opportunity, not trying to kick the market in the direction you want it to go. Okay, more later, guys. Talk to you. Bye.